If you look at the world, there's very little collateral left that's unencumbered. What they're doing is they are bringing gold front and center, and that will be used as the collateral to margin or leverage or whatever word you want to use to make settlement. And in order to make settlement, you've got to have overnight repos. You have to have overnight money. It's not just from the standpoint of they're trying to protect their balance sheets against dollar losses with gold, dollar gains, if you will. What they're doing is they're trying to fully bring gold into the system. It's not just an asset held by central banks and sovereign treasuries, but it's an asset that can be used to settle trade.
They're buying hard assets. They're buying gold hand over fist. You can see the central banks accumulating a lot of gold. That's why I think the great taking is happening already.
The global financial system is undergoing a profound shift, with gold rapidly moving from being a passive reserve asset to an active tool of settlement. Central banks are no longer simply holding gold as a hedge against dollar volatility. They are increasingly bringing it to the forefront as collateral in overnight lending and cross-border transactions. At the same time, the dollar's decline in credibility has created an environment where nations are stockpiling gold and silver, not just as a store of value, but as a weapon in financial warfare. The East understands that the US dollar, once the backbone of international trade, has become a liability. With sanctions, tariffs, and confiscations of foreign reserves, trust in the Western system has fractured, prompting countries to seek borderless, unencumbered forms of wealth. BillHolter and MarioInnecco are two well-regarded voices in the world of precious metals and macroeconomic analysis. Holter has long warned about the risks embedded in a dollar-centric system, highlighting the vulnerabilities that come when debt overwhelms collateral. Innecco brings decades of experience studying the global economy with a sharp eye on how monetary policy, geopolitics, and markets intertwine. Together, their insights underline a reality. Gold and silver are no longer just safe havens. They are becoming instruments of settlement and survival in a fractured financial order. Now, we present the clips from their interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
Yeah, it's not dollar strength, it's dollar weakness. We're less than half a point off the 96 level, which would be a new low for this move. Another thing that I've been watching, and I think might have talked about it with you a month back, is the yield on the Japanese bonds. The 30-year yield now is over 320, and that was it was a resistance point. We've gone through that, and I mean, frankly, if you look at the action in gold and silver, they look squeezy. And they look like the beginnings of a short squeeze. Now, obviously, I mean, you can look at lease rates on silver. You can look at lease rates on SLV, the borrow rates. They're all getting more expensive. And I mean, frankly, it looks like the end game is going to be a failure to deliver. So there seems to be blood in the water as gold broke through the 3,500 level and silver broke over the 3940 level. The action to me looks squeezy.
This is something that we've heard just recently. This is a new phase, it seems, of market behavior. It's no longer the old.
Yeah, that news broke, a week or 2 weeks ago that silver was going to be added as a strategic metal. But if you go back, what was it, probably 2 months ago, Russia announced that they would be also adding silver and stockpiling silver. So there is physical demand from all over the world. I mean, the BRICS nations are they're stockpiling gold, and now it looks like they're stockpiling silver. The world understands that the dollar's days, the good days are behind it, and it's ultimately going to collapse. So you've got central banks all over the world trying to unload gold onto their balance sheet because gold, I mean, the best way to describe gold, it's the anti-dollar. So as the dollar collapses, gold goes higher and it makes up for losses that they'll be taking on their balance sheet. On the dollar side, they'll gain on the gold side. If you look at the world and come to the conclusion that basically the world is at war, and part of war is financial war. If you think about it, what's the easiest way for the East to blow up the West? Would be to blow up the financial system. And the way to do that, the Achilles heel is gold. And the fuse to that Achilles heel is silver. I think, well, first off, the country's divided in so many different ways. It's divided between left, right, conservative, liberal, and there's so many other different ways. I mean, by race, by religion, you name it, the country's split. And you're going to be disappointed in this answer, but nobody's going to step up. If you're feeling like you're falling behind or whatever, nobody's going to step up from the government or anywhere else to save you. This illustrates exactly what you, myself, and a lot of other bloggers have talked about over time, is that you need to become as self-sufficient as you possibly can. You need to protect yourself, your family, because no one else is going to do it. Now, internationally, that's pretty simple also. What are tariffs? Tariffs are, if you want to call them, they're fighting words. Every time we put a sanction on Russia, what is that? Is that, is it a greeting card or is it a financial act of war? So it's, from an international standpoint, it is the world. The world is fighting over trade, if you will, because trade got so imbalanced. Where the United States, our biggest export was dollars, and we imported real things. And the world got to the point where they got tired of exporting real stuff and accepting dollars, and they're looking for a way out from under the dollar hegemony. Unfortunately, it is East versus West, but they're acting logically and doing they're making logical decisions, logical acts, and the most logical of all, if they want to get out of dollars, is to stockpile gold. And you're seeing that, you've seen that in the price of gold. You've seen that in the price of gold since October of 2023, when, was it 2023 or 2022? I can't remember. But if you look at the gold chart, you'll see it virtually to the day after the Russian reserves were confiscated, gold started going higher, because the rest of the world looked at that and they said, hey, if the United States can steal Russian gold, can steal Russian assets and get away with it, what could they do to us? They could destroy us. So, the logical move is to offload dollars / treasuries and unload gold, because gold has no borders. Gold is borderless. Gold is accepted everywhere in the world. If you look at the world, there's very little collateral left that's unencumbered. And what they're doing is they are bringing gold front and center, and that will be used as the collateral to margin or leverage, or whatever word you want to use, to make settlement. And in order to make settlement, you've got to have overnight repos. You have to have overnight money. It's not just from the standpoint of they're trying to protect their balance sheets against dollar losses with gold, dollar gains, if you will. What they're doing is they're trying to fully bring gold into the system, where it's not just an asset held by central banks and sovereign treasuries, but it's an asset that can be used to settle trade. Yeah, we've talked umpteen times about being prepared, but preparedness is not just stockpiling food or stockpiling gold and silver or stockpiling lead. preparedness. You need to be prepared mentally, physically, spiritually. You need to prepare yourself for the battle, and the battle's already begun. People can feel that.
The Dow to gold ratio tells a very different story than headline stock market gains suggest. On the surface, portfolios in fiat terms may look healthy, but when priced in real money, wealth has been quietly eroding for decades. The same pattern shows up in the FTSE to gold ratio and in gold versus treasuries. Despite nominal gains in bonds or equities, measured against gold, both asset classes have been in long-term decline. That is the essence of debasement, slowly stripping purchasing power while most remain unaware. The wealthy, however, do not ignore these signals. Central banks are buying record amounts of gold, high net worth families are moving into physical metals, and private equity stakes in miners, and established wealth across Europe and Asia is allocating to hard assets that have stood the test of centuries. Gold, land, wine, and other tangible stores of value continue to serve as the foundation for enduring wealth. Liquidity matters too, which is why gold and silver remain critical. They can be used globally, instantly, and outside the control of any single system. For those who recognize the long arc of financial history, the fundamental reset has already begun. Let's get back to the interview.
We'll start with the granddaddy of these ratios. It's the Dow Jones Industrial Average to gold ratio. So that's basically just the Dow priced in gold, which is how it used to be domestically for the US before Roosevelt banned gold in 1933. So that's the other thing as well. When we look at the stock market crash in 1929 and the few years after that, we're not really looking at the same Dow as we have now, because now the Dow is not priced in anything real. It's priced in ephemeral fiat dollars. But anyway, I said to you that I think the reset really has been going on for quite a while, and it could be accelerating now. So this is how many ounces of gold it takes to buy one Dow Jones Industrial Average Index. And you can see that it topped back in late 1999, just above 44. And ever since then, we've been in a bear market, really. We have had a bear market rally, in my opinion, in the Dow since 2011, when we bottomed around 6 in this ratio. But now it's keeling over again, and I think it's going to accelerate. And yes, we're going to go towards 1, in my opinion. It could be even less. What would that mean? Well, that would mean you might only need half an ounce of gold to get 1 Dow. The price at which gold or the Dow will be in fiat dollars is difficult to say. But what I'm trying to say here, I think, well, 99%, the vast majority of people don't have a clue, don't realize that they're actually losing wealth despite the fact that their fiat dollar portfolios look good. And I think this is the most important chart in terms of the 60 proportion of the 60-40 portfolio. Excuse me. So that's for the US. Let's look at the UK. I've done the same thing, the FTSE 100 index to gold ratio, and it's the same story. And it's gonna, yeah, it's breaking down here too. So yes, it's really important that we know what we're denominating our wealth in. And I think denominating our wealth in fiat dollars or fiat pounds or fiat euros is a really big mistake right now, because, as I said, we're entering a major currency event. In terms of the 40 part of the portfolio, it's the same story. I have reversed it here. I've done the price of gold, or the price of gold, the price of gold in bonds. So, and this is the 10-year Treasury, constant maturity security. And you can see that back in 2000, the price of gold was only just above 2. And now the price of gold is at all-time highs versus treasuries. It's at 36. So that means that bond investors are also losing out, despite the fact that in dollar terms of late, bonds have gone up, yields have gone down. But yeah, it's the same story. And I think that's what's going on. That's how they're taking wealth from you. That's how they're debasing the currency. And what are these people doing? The very wealthy, the people in the know. Well, they're buying hard assets. They're buying gold hand over fist. You can see the central banks accumulating a lot of gold. They're also private high net worth individuals are buying a lot of physical gold and silver. People are starting to buy a lot of miners. They're doing it also through the private equity market, maybe because they're concerned that there could be a great taking through the public markets, through private equity. If you own privately the company, it might be a bit harder, but anything's possible. So that's why I think the great taking is happening already. And I said earlier I was going to tell you how you can fight it. Well, by being outside the system, by hedging your, being outside the system, but also you want to stay in the system because this deflationary collapse, great taking might not happen. And David Rogers Webb says that we need a deflationary collapse for this great taking. But in terms of hedging the value of your wealth, because that's what really is happening there, like fleecing you without you knowing it. I think gold and silver are the best things. They're money. They're very liquid. Yes, antiques, like classic cars, wines, real estate, land. That's all very good, but it's not as liquid. You can't really use it as money whenever you want, even though I think it's important to have. And you will see that the very wealthy are positioned in such a fashion. I remember Jim Rickards went to Italy some years ago, and he met with very wealthy families that have been around, or that have had wealth for centuries, and their secret, apparently, according to him, is gold, land, and wine. So, that's how I see things. Ultimately, though, I think the most important thing as an individual is that you have peace of mind, that you're well in your mind, in your body, with your family, with the community, and that you are aware of what's going on. Yes, money, wealth, savings is important, but it's not everything. You can always rebuild it, and that's what I'm trying to say. But it's also good to try to keep a hold of it, because you don't want to go through the heartbreak and the difficulties. So since the beginning of the century, I would say, and it all comes down to what currency you measure wealth against. And ultimately, the reason why I do it with gold is because it's been the ultimate measure of wealth for thousands of years. It hasn't been paper money. Paper money or the paper dollar of the last 54 years internationally, and since 1933 domestically, it's not real wealth. It's not a measure of real wealth. I mean, it's the ghost of money, right? It's the ghost. It's paper. It's only a promise.
Every time paper promises outpace real value, the system eventually rebalances toward hard assets. We've seen this cycle repeatedly, from the breakdown of Bretton Woods to the dot-com crash to the financial crisis of 2008. Each reset brought capital back to tangible stores of value, and gold consistently anchored that shift. What's unfolding now is not a short-term market fluctuation, but a structural repricing of trust itself. Confidence in governments, currencies, and central banks is waning, while confidence in scarcity, durability, and neutrality is rising. For investors who study history, this transition offers both warning and opportunity. Silver, gold, and other finite assets are no longer contrarian bets, but essential hedges against a fragile system. The time to prepare is not after the headlines confirm it, it's before the shift accelerates. That's why understanding these cycles matters now more than ever. Share your thoughts on their analysis in the comments section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.